This is Notorious POD, the podcast for the best informed people in the real estate industry. Rob Hahn is your host, and Notorious is where the real estate industry comes for real talk with no bullshit.
Hey everybody, welcome to, I don't know what to call this because Sonny hates the term musing, so I'm going to go with something else. The solo pod, I don't know, the Notorious POD, it's just me today. And I wanted to record something because I've had a number of interesting messages and conversations of late. As some of you know, at the beginning of this year, I said, look, I think, blockchain is the future. I think this thing is legit going to change the world, and I'm a big believer. And along the way, I think I made it clear that I'm pretty optimistic about crypto. So I've had a couple of friends message me the last couple of weeks, just like, "Are you okay?" Because the crypto market's completely crashing, right? It's tanking, and people are freaking out, and there's all sorts of bad news. And so friends of mine who actually care about me are like, Rob, I know you have a lot of money into crypto, and are you okay? So there's that, and then there's obviously all the people like crypto's a scam, Bitcoin's going to zero, all this stuff, and I completely understand all of it. And then yesterday, I was at the range and talking to this guy I met, and we just get to talk about the economy, talking about things, and this topic came up, and I just thought, you know what? Just got a haircut, so hey, what the hell? I'll record something because I've been wanting to maybe address this anyway, and it just seemed like a pretty good time to do it. So first, I am just fine. I think, as I might have mentioned in, at least in conversation with friends, I might have mentioned it in previous posts or previous recordings. Yes, I'm a big believer in sort of crypto. I'm a big believer in blockchain. I'm a big believer in Web3 because this entire Web3 blockchain technology reminds me of the first .com that I was part of, right? That I had this company, I started it, I sold it off to USA Networks. I mean, it was a wild adventure. But what I can say is when I really understood blockchain tech for the first time, this idea of decentralization, it kind of made me think about what that feeling was when .com, 1.0 came around, right? Like I'd known about the internet because I used it in college, to use net news groups and things like that, and email. And it was kind of this weird little thing. But it didn't really think like, okay, this is going to change the world. But when Netscape came out and the internet was sort of really introduced to the world, I think a lot of us, and I really do remember feeling this, like this is going to change the world. Don't know exactly how, but it's going to change the world. I want to be a part of it. And that's how I felt about, Web3 and blockchain and crypto. So I want to be part of it. Having said that, I've also mentioned that I pursue what I like to call the barbell strategy for investment, right? And this is Nicholas Taleb, talked about it in Black Swan. And the barbell strategy essentially means you put most of your investments like super safe, right? Like nothing's going to happen, super duper safe, treasuries, real estate, things of that nature. And then you put the remainder in super risky, right? You don't go in the middle, right? You don't do index funds, right? You do like real estate and crypto. And that's effectively what I've been pursuing. So I'm just fine. And I do feel bad for some people, especially the younger generation, that essentially gambled on crypto with money that they can't afford to lose because it is gambling. And when I started going down this path, Sonny and I had this conversation, and I'm like, look, I live in Vegas and I don't gamble. So this is my form of gambling. Obviously, I'm not going to bet money that I can't lose. So number one, thank you very much. I'm just fine. But number two, it occurred to me that maybe there's some value in kind of talking about at least, my idea and my idea, my investment thesis, if you will, because there's something that's shared by a lot of people. And most people don't really, I don't know how many people really kind of articulate or just kind of voice it. So I figured, what the hell, I might as well. And again, I could be dead wrong. Investments are just that, they're investments. They're not sure things, right? They're bets. But I'll kind of give you my take on why I'm not freaking out, why I'm probably going to back up the truck and buy more Bitcoin as soon as it hits kind of, where I think the price targets are going to be. But it's this: you have to have some investment thesis. You have to have some idea, some insight, some guess, right, that makes you think, I want to own this, right? Whatever it is. So if, for example, Tesla, right? I mean, Tesla's lost money for how many years, right? But people invested in Tesla had this idea. They had an investment thesis, right? Which is, look, world's going to go EVs, right? We're going to move away from fossil fuels. We're going to move to solar. We're going to move to kind of clean energy. We're going to move to electric vehicles. So I'm going to bet on this company that's kind of the leader in doing that. Who knows? Tesla could still go bankrupt. I know they're, really big now. They're very successful. Elon Musk is the richest man in the world and all that. But, who knows, right? It could still go under. Similarly, you have to have some thesis. You have to have some idea that makes you say, I'm going to bet. So like I talked to Tyler. I did a video with him on Notorious Pod. He's a big believer in Open Door. He has an investment thesis. He thinks that Open Door is going to transform the way people buy and sell houses. So he's in it. Could he be wrong? Maybe. Open Door could go to zero. I mean, their stock's not been doing great. But you have this thesis. You have this idea. I say all of this to mention what exactly investment thesis behind Bitcoin, right? Why are people buying Bitcoin? I think when I think about it, there are two types of people. Well, really three, right? So there are sort of what I'd like to call true believer investors who have an investment thesis. There are the investors who come on because they see what's happening. They want to be part of the action. So the FOMO investors. And then third, I think there are the traders, right? Which are, for the most part, they're professionals. So here's the difference, right? Let's go reverse order. Traders. A good friend of mine, in fact, I have a number of friends who are professional traders, or like hedge fund people, right? When they if you look at trading, the whole idea of trading is you just buy low, sell high, right? Or you short high, buy back low. These are professionals. Like, they look at charts, they have all sorts of techniques. They're really, really smart. And all they're trying to do is buy for $1 and sell for $1.50, or buy for $1, sell for $2. So for them, I don't think most traders have an investment thesis at all, right? I think they're just trying to kind of discern what the market sentiment is and ride the market sentiment. And I think it's very smart. A lot of them make millions of dollars, doing just that, right? Hey, Bitcoin's trending up. Let's buy into Bitcoin. Hey, it's getting to this point and the technicals, the charts are telling me, maybe it's headed down. I'm going to sell, right? Take my profits and then maybe buy back in at a lower level. I mean, people do that. People do that with stocks. They do it with bonds. They do it with commodities. They do it with anything and everything that could be traded. That's sort of semi-liquid, right? In fact, there are people who trade in real estate. I just talked to a friend of mine who's a real estate investor last week, and he sold 2 of his properties. And I said, okay, so the question that I've been asking on the blog and elsewhere, okay, cool, you have all this money. What are you going to do with this money, given that we're at 8.6% inflation, all of that? And his thing is, look, I'm just keeping my powder dry. I think I'm going to wait for the market to maybe cool down a little bit, and I'll find opportunities. I'll go invest. In other words, he's a trader in real estate. He bought real estate low. He sold high. He took his money, and then he's going to go back into real estate. He's going to buy, when he thinks the right opportunity arises. That's not an investor per se. That's a trader, right? And good for him. Like, I think it's a perfectly valid approach. The second type of people who are, I think I call them the FOMO investors. Unfortunately, I think this is most people. Right? And so there it's, hey, this Bitcoin thing, I don't know anything about it, but it's going way up, right? So let me get in there, right? Let me buy in. And oh, wow, it doubled in price and I'm so happy, I'm so wealthy. But they don't take profits, right? They're like, oh, it's going to keep going up, right? So they just hold on to it until, it goes to like bupkis. So I think a lot of folks were investing in crypto because they were kind of FOMO traders. And a big subset of them, quite frankly, I think were gamblers. And I think I just wrote this on the part 4 of my Horseman series. A lot of them are young people. And I completely understand why they were gambling. Right. In fact, I had a conversation with one of those guys just last week. He's 32 and he's gambling. He's gambling crypto. He's in like AMC stocks, he's in meme stocks, he's in meme coins, and he knows that he's gambling. And we've talked about this. And his whole point is, look, everything that society, my parents, everyone's told me is total bullshit, right? It's not, stay in school, work hard, get a job at some big company, be loyal, and then to get, collect your paycheck. And then after 30 years, you're going to retire with a gold watch and a house. And like, that's all bullshit. That does not happen. The war on wages has been going on for too long. And he feels like I can't make it, right? I'm never going to sort of achieve what I want to achieve, buy a house and all these things if I don't take huge risks, if I don't gamble. So he was gambling, right? And I think that's the case for a lot of the younger people who are in crypto, so-called crypto bros, right? They're looking at, whatever, $1,000, $10,000, $20,000, which is a huge amount of money, especially for them. That could be like their life savings. And they're like, I can't buy a house with this, right? I don't make enough money. Like I can't achieve any of the stuff I really want to achieve. So I have to gamble. I have to take a shot that this, whatever, meme coin is going to 10x or 100x. And then, I'll make sort of life-changing money. And I think that's why a lot of people were gambling and they're FOMO investors. So, Fed raises rates, the market crashes, crypto's down 90%, they lose everything. I mean, it happens and they're freaking out. So the first group, which I think I belong to, let me explain why those of us in the first group, I think the media would call us hodlers, because we're buying and we're just holding. We're not selling. We're not traders. We're not trying to sell hype. And I suppose there are some true believers who are, smarter than I am, or they do this with, more time. So they did sell, maybe they bought Bitcoin at 30,000. They sold out at 59. They're buying back in at 20. That's incredibly smart. Good for you. I'm not a trader, so, I don't worry. But those of us who are sort of the true believers, we have an investment thesis. Okay. What is that thesis? The investment thesis behind Bitcoin, people are like, well, it's not an inflation hedge because it's never been about an inflation hedge. And I think that's the missing point. Like, you don't buy Bitcoin because you're worried about hedging inflation. You buy real estate if you're trying to hedge inflation. You buy gold, right? You buy Bitcoin for one reason and one reason only. Okay. It's because you are expecting the fiat currency system to collapse. That's it. That is the investment thesis behind Bitcoin. And again, this isn't my opinion. You read guys like Safety Namus, or you talk to Michael Saylor, or any of the big names out there that have been really talking about Bitcoin. That's the investment thesis. The investment thesis is the world today operates on a fiat currency system dominated by the US dollar, and the money printing will continue. It has to continue until it can no longer continue, and the entire system collapses. And when the entire system collapses, we still need to figure out how to do trade, right? Especially international trade in a global economy. So something has to take that place, and we're betting that something will be Bitcoin, not Chinese yuan, because that's another fiat currency, not euros, another fiat, and likely not gold, because you can't send gold over, electronic wires, right? We could all be dead wrong and we'll all go to zero. That's fine, because I'm gambling, right? To some extent. But we have this thesis. Why do we have this thesis? Well, let me share some things with you, because this is, I think, critical to understanding, those of us who are foolish enough to bet on crypto, as you say, but you don't need to feel sorry for us. So this is the US national debt clock, right? As of right now, and then you can see numbers going up, the United States, the national debt is over $30 trillion. Okay. Our debt to GDP ratio in 1980, 35%. In 2000, when the whole .com bubble crashed, right around then, 57%. In 2008, I think it was around 60 some odd percent, when the whole great financial crisis. Today, it's 130%. It's 130% of GDP. What's more interesting is, and we know it's because of the money printing, right? I mean, this is the thing that gets everyone's attention. This piece right here, which is the whole post-COVID, crazy money printing. But look at the trend. Look at the overall trend, right? This is what the Bitcoin is looking at. That can't continue, right? Can't continue. And, at 30 trillion in debt, and our tax revenue is only, it's unsustainable. And the guy that's been talking about this most, I think, has been the most correct, and I've mentioned it on a number of my videos, I mentioned him in blogs, is Luke Roman, right? And he just recently put out this Twitter tweet on June 15th, another Fed meeting where everyone pretends the U.S. sovereign balance sheet, deficit position, and demographics are all where they were back in 1979, akin to me holding a call to discuss my plan to start a shooting guard for the Golden State Warriors next year. Obviously, he's pointing out that it's not going to happen, right? He's not going to be a professional basketball player, and the Fed is not going to be able to deal with what's going on because they don't have the tools anymore. Specifically, you can't. I mean, everyone thinks like the Fed's going to keep raising rates and, mortgage rates going to go to 12. I think I said that. Could be wrong. They're going to keep raising rates and the market's going to collapse and crypto's doomed and the dollar is going to be super strong, et cetera, et cetera. And what Luke points out is that's not actually feasible. And I don't know if you could read this. So this is a transcript from Macro Voices. Go find that on the internet. But it was one of the most kind of like mind-blowing insights for me as I was doing this whole journey. And it says, if you look at what we call the US's true interest expense, which is treasury spending plus entitlement pay-go, meaning, things like Social Security, Medicare, these are entitlements and the government there's like a pay-as-you-go portion, right? Not the unfunded liability, which is much bigger. Just as you go, you have to pay these amounts, right? And you just look at the pay-go. And that's it's effective interest support the entitlement obligations. You add those two numbers together. What you find is that those two numbers are 111% of U.S. tax receipts. Okay. So, yeah. So if the U.S. takes in $4 billion, it's like 4 trillion in taxes. Then it's 4.4 trillion is just interest, just the interest payments on the debt plus the pay-go portion of entitlements, which are legally required. And as he points out, that's what tax receipts at all-time highs, aided by an epic everything bubble. So the stock market's been doing this, housing market's doing this, capital gains taxes, business taxes, income tax in general, because people are selling houses and getting, the tax receipts are all-time highs. And even with that, what Roman points out is our true interest expense is over 100% of taxes. Okay, where's that remaining 11% coming from? Right. And this is, by the way, before we spent a single dime on anything that we consider as government, right? Like the military, like roads, Department of Education, Census Bureau, I don't know, ATF, whatever, right? Whatever you think of as government, national parks, whatever you think of as government, it's 111% before we spent a dime on any of the other stuff, right? So his point essentially has been for a while, look, the Fed's talking tough, but they can't do it because if you keep raising rates, then obviously two things happen. Number one, the economy slows, it collapses, the stock market collapses, and then tax receipts are no longer based on like these epic numbers. It's based on much lower numbers, or people start posting losses, right? So they're not paying taxes. You don't pay tax when you lose money. You only pay tax when you make money. So, right, tax receipts will fall. It's not like we're changing anything in the entitlements. It's not like the interest payments are actually going up because the rates are higher. It can't last, right? It simply can't last. And he thinks the Fed's going to reverse and, they'll go back to quantitative easing. They'll go into cutting rates. We'll see. Point is, all of this is to point out that the system that we're living through, the economy we live in, nobody thinks it's sustainable in the long run, right? Or at least those of us who are sort of, if you will, true believers, we don't, this can't go on, right? And that's just the US, by the way, which is the healthiest economy, the healthiest country in the world. So you look at like European Central Bank, Italy, Greece, Turkey, Japan, like completely out of whack, right? It just can't continue where governments just print money to pay for stuff, and then like the inflation is just underreported and absolutely insane. So our whole thing is this can't continue, and it's something that can't continue, won't. So people are like, Bitcoin's below 20, this is going to zero, this maybe, right? Maybe. But if your investment thesis is I'm buying Bitcoin because I expect the currency system to collapse, then the question is, has the currency system collapsed? If the answer is no, then why, you know what I mean? Like, then why would you even care one way or the other about the price of Bitcoin or whatever, priced in dollars, the thing that you think is going to collapse? It doesn't make sense, right? So I think that's just Bitcoin, right? Because that's a very specific digital asset. And I do think that the FOMO people need to do one of two things, right? So if you got into Bitcoin, if you got into crypto because you're like, wow, this is a way to get rich quick, you probably need to get out, honestly. You gambled, you lost. It's time to walk away from the table, recoup what you can, and probably put that money into something safer like real estate, honestly, right? The barbell strategy, right? Commodities, gold, and put it in something else. If, on the other hand, you're a FOMO and you decide that, there's still something there, like, investigate this. And I think the question you have to answer is, do you believe that this current system, this fiat currency system, can continue? And for how long, right? And if the answer is yes, you think it will continue, we're never going to move away from the US dollar, the United States is the most powerful country ever, and so on and so forth, and who cares, 30 trillion in debt, we're going to figure it out. Cool. Then sell Bitcoin, get out, get dollars, have cash, and put it into something that you feel more comfortable with. If, on the other hand, you do some investigation and you find the proposition that you cannot keep printing money till the cows come home when you have 30 trillion in debt and your interest payments are over 100% of tax receipts, that this entire system has to collapse. It has to come crashing down. And we then, as a world, as humanity, have to replace that system with something else. Then the only question is, what will we replace it with, right? And the contenders, quite frankly, are gold, right? Because that's what gold bugs. You go back to a gold standard. So you say, look, we're going to peg, the value of a dollar or euro or yen or whatever to gold, or it's something else. And if we say it's something else, then what, right? So I'm not, like, I don't care if you buy. Like, I'm not sure. I don't have a company. I don't have a business selling Bitcoin. I don't care, right? And down, up, it doesn't matter because the investment thesis is the thesis. So I think that's the important part, to understand. Sure, if you have friends or if you are that person, you put too much money into Bitcoin and now you're feeling stressed out. I'm sorry, like, I don't think you should ever put money into into anything like that you're going to get that stressed out. But if you are in there, then consider your investment thesis. Why? So on that note, let me just talk a little bit about sort of the altcoins, right? Ethereum, Solana, Algorand, all the other stuff. I think I wrote a post a while back saying I look at Bitcoin as digital gold, and I look at Ethereum and the altcoins as digital oil. Okay. And the idea there is pretty straightforward. Remember, I said, look, when I learned about blockchain, this was like one of those, holy crap, this is going to change the world. I don't know how, but it's going to. My take on it is, if computing, because look, in this age, we're going to keep computing, right? We're not going to go back to, no electricity and dark ages. Like, I don't think we're going to do that, right? So we're still going to have computers. We're still going to take advantage of electricity, electronics, and CPUs and mobile phones. That's still going to happen. Okay. The premise is, will that continue to be centralized the way we've had for the last, it's the beginning of computing, right? So, Amazon, Google, Facebook, these big companies, all information, all of the it's like centralized onto these humongous servers. Maybe it's on the cloud, it's AWS, or are we moving to something else where computing technology is decentralized, right? and among thousands of nodes, and what's the technique for doing that? I think that's the first question you have to answer. If you think technology will continue to be centralized because the world we live in, economies of scale, government, regulation, okay, cool, then you believe it's going to be centralized, then you should plan accordingly, right? Then I think things like Ethereum and Cardano and Algorand, like these things are probably a total fucking Ponzi scheme, right? If you think the technology will be centralized. If, on the other hand, you think technology will be decentralized in the future, who knows when, 5 years out, 10 years out, then these coins like Ethereum and whatever, these layer ones, they're the digital oil. They're what you need in order to power this decentralized computing. And if you think of it that way, maybe Ethereum's not worth, what, $2,700, whatever it hit. Maybe it's only worth $100, but it's not valueless, right? Like if computing is going to get decentralized, then whatever token, whatever electronic currency that's going to be used to power that computing system will be valuable. That's the bet. That's the thesis. Now, I think that's a much weaker thesis, if you will, than Bitcoin thesis, because again, 30 trillion in debt, right? Unsustainable money printing, unsustainable debt levels, unsustainable interest payments. Those are numbers. Those are not opinions. There's nothing we can do about that. Whether technology can decentralize or not, I think that still remains to be seen, right? I know where I'm betting. I think technology will be decentralized. I think society as a whole will become more and more decentralized. But that's one of those like fourth wave, like who knows, 10 years out, type of thing. And I'm comfortable with it. Right. But that would be my take on it. So if you are kind of interested, or if you own altcoins and you're trying to figure it out because, oh my God, I've lost whatever, 70, 80, 90% of the portfolio value. I think only thing I could say on that front is you gotta just at least understand what your investment thesis was. Did you get into Ethereum because you thought Ethereum was going to power this decentralized computing future? It hasn't happened yet, so keep holding. If I think you bought into Ethereum because it's going up and oh my God, it's like the next big thing. Maybe it bounces back, maybe it doesn't, right? Because Ethereum is just digital oil for one type of decentralized computing. Maybe that's not the future, right? Maybe it's something else. Maybe it's a different layer one. Maybe it's private blockchain, so we don't need any coins. Who knows? But that's the premise. And I think you do have to decide for yourself kind of what your thesis is, right? Now, before I leave off, let me, because, obviously I'm in the real estate industry. What's your investment thesis for real estate? Right? Because it's also relevant. This was a conversation I had at the range, with the gentleman I met. Right? What's your investment thesis for real estate? If your investment thesis is buy low and sell high, then I would maybe rethink some things. I would then maybe have some questions, right? You have to have, again, investment thesis, right? What's mine? Mine's pretty straightforward. I don't think real estate prices have gone up. I don't think housing prices have gone up. I think I've written a bunch of posts about that. I think the dollar's devalued. And real estate price going up is simply a function of real estate tending to hold its value because it's a real, tangible, physical thing, right? That everybody needs. Everybody needs. It's like the whole NAR preamble, under all is the land. Everybody needs. If you're a business, you need land, you need buildings to operate a business. If you're a family, you need a house, you need land in order to like escape the elements and have heat. Like everyone needs it. So it's not the price of housing, it's the dollar's devalue. So that's number one. Number two, as rates go up, as mortgage rates go up, as all this sort of chaos and all these things happen, the recession's coming and all of that, yeah, that maybe really reduces buyer demand. And I think we're already seeing that. What's your investment thesis? If your thesis is, okay, well, I bought at 100, now it's at 600, I should sell. Cool, sell. What are you going to do with the 500,000? Right? My friend who's the trader, he's doing it intentionally. He's like, I'm going to sell at this. I'm coming back in. I just want dry powder. but I'm coming back in and buying houses, buying real estate again once I feel like the opportunity is there. That is trading. And honestly, unless you're a professional, unless you do that like on a regular basis, then that's a real dangerous game, right? It's no different than trying to trade the stock market, trying to trade crypto, trying to trade bonds. Like, there are some real smart, really sharp professionals out there with a lot more tools and a lot more data, a lot more information than you've got. So I would just question that. If, on the other hand, your investment thesis for real estate is it's a fundamental good, everyone needs it, buyer demand is going to drop off the planet, drop off a cliff because of rates and recession and everything else. All right, well, they still have to live somewhere, which means rental, which means I should buy whatever the price, as long as I could raise rents appropriate to get yield, then why wouldn't you? Like, that's the investment thesis. That's one that at least makes sense. And the big weakness of that particular investment thesis is if things get bad enough, then rent control is most likely a political reality you have to confront. So anyway, I don't know if this was useful in any way, but I just thought I would get it off my chest because, like I said, I've had a number of friends calling me and be like, "You okay?" And and then all this conversation, all this sort of general mood and narrative, like crypto's a Ponzi, and some crypto is a Ponzi. Fine, whatever. Celsius is going to implode. Okay, fine. Celsius implodes. Doesn't change the fact that if you own Bitcoin and you have an investment thesis, which is collapse of the fiat currency system, it hasn't happened yet. Decide accordingly, right? Whether you want to essentially, I guess the way to think about it is, do you want to short fiat currency? And if you do, then there aren't that many choices to do that. If you don't, if you believe in it, then obviously get the hell out. Like, what are you doing? Cut your losses. Anyway, that's it for today. Just thought I'd share my thoughts with y'all. If you have any questions or any of your own thoughts, post comments, let me know, send me messages, all of that. And thanks, everyone. Have a good one.